Hey, what's up, everybody? Just want to check in and do a video. In this video, we're going to be going over a Nadex binary option strategy, and this is more for you guys that have full-time jobs, or if you're working during the day, you get home at the during the evening time. Then basically, this is like a set and forget strategy for you, so you can just put the trade on and kind of just walk away and maybe monitor the trade. Definitely want to monitor the trade. So the name of the strategy, we're just gonna call it the in the money strategy. All right. I'm not really creative. I don't really have a name for it, so I'm just gonna go ahead and just show you what it is. So what you want to do is, it's 8 p.m. right now. Just turned 8 p.m. Eastern time. I'm on the Nadex platform. And let's just say that I'm just getting home from work, right? First thing I want to do is I want to open my platform, and I want to make sure that I'm here at 8 o'clock, all right, 8 p.m. If I can't make it here by this time, then don't worry about taking the trade, all right? So we're here at 8 p.m. What we want to do is we want to open up our Forex binaries, okay, on the Nadex platform, and what we want to do is we're looking for a contract that expires at 11 p.m. All right, it's the daily contract expiring at 11 p.m. Eastern time. Okay, that's really important that you remember that part. It has to be a daily contract for 11 p.m. All right, so it should be expiring in a few hours, 3 hours. Right, so the idea behind this strategy is, really we're not even going to look at the charts too much. And normally I'm not a big fan of not using charts, but from my experience with trading on Nadex, since it is an option style platform, a lot of the times you don't have to use charts to be able to tell where the price is, because if you guys noticed, Nadex is based off of price. Okay, the platform and the pricing is based off of the actual market and the volatility, the time of day. All that plays a factor in how they price the strikes, right? So I can look at the price here and tell exactly, well, not exactly where the market is, but I can kind of tell if the market is ranging, if it's trending, just by looking at the price. All right. So but anyways, what we want to do is we want to look for a currency pair that offers a variety of strikes. Okay, this is really important, guys, because the more strikes you have, the better chance that you're going to have a profitable trade. Okay, now it's important that you use the 11 p.m. contracts because they're spread apart wider. Okay, the distance between the strikes are wider than let's say an hourly contract or a 20-minute binary, 5-minute binary. All right, the further you go out, the wider the strikes will be, higher chance you have of winning a in the money trade. Okay, and like I said, this is not something that is rocket science, guys. It's not something that hasn't been thought of before. There's plenty of people using this. I'm just sharing it with you guys if you haven't already learned this method. All right, for me, this is just a set and forget strategy. I like to put this trade on every day, and it doesn't stress me out. It doesn't require a lot of time or analysis or anything like that. So we got a pretty good amount of strikes here. They're 20 pips apart. It's pretty good distance between them. Now what we're going to do is we're just going to select an in the money contract. Now I don't normally like to go for payouts this low. I usually like to get at least 20 bucks on the trade, but sometimes you can't get what you want. I definitely don't want to drop down a strike and try to get the 30 bucks, 32 bucks here, just because obviously that's lowering my chance of making profit. So I'm not going to do that. But what I am going to do is I am going to just go ahead, select this $15 trade. So I'll make a $15 profit if the contract expires in the money. So basically, if it expires lower than this $15 strike here, which is 0.7380 by 11 p.m. I'll make money. So that's not a lot of time. Okay, that's just 2 hours away, a little bit over 2 hours away, and it would have to move quite a bit for me to lose this trade. Now, it's really important that you guys make sure there's no news coming out in this time, because that could be the one thing that could actually make you lose. If there's news coming out and there's a huge event that happens and it moves the market, then yeah, it can move the market 20-40 pips easily, right? So we want to make sure there's no news. So there's no news coming out, so I'm going to go ahead and hop in on this trade. I'm going to just put on 10 contracts, what I normally put on anyways. And we are officially in the trade. Now, for you guys that, if you guys don't like putting on in the money contracts because you feel like it's not worth the risk, then this isn't the strategy for you, because this is an in the money strategy. All right, we're risking more than what we would potentially make, but the only reason we're doing that is because we have a higher chance of winning. So basically, I'm making a $15 profit, which means I have an 85% chance of winning if all goes right. All right, so what I'm going to do right here is I'm just going to put a take profit in. I usually do that most of the time, just to play it safe. You don't have to do that, but just for me, I'm a big fan of using take profit. But anyway, so another thing that you could do is you could also hop to the other side and do a buy position. Now, this is what we call an iron condor, or iron butterfly if you want. I think they're the same thing. Look it up, I don't know. But iron condor, iron butterfly, basically when you do the opposite. So we just did a sell position for an in the money contract up there. So we're going to do a buy position for around the same price or the same payout, right? So we go ahead and do the same thing on the other side, and you can see that our payout is pretty close, right? For both of them, not too far off. So basically what we're saying is the price will settle right between this area here, right between these strikes here by 11 p.m. Okay, now I'm not gonna say that I'm not gonna say it's impossible for the price to break out of this range, but I know for sure at this time of the day there typically is a lot less volatility than there would be during the day or during the active times of trading, which is the U.S. session. Okay, and this is the main reason why this strategy works, is because the time of day that we're doing it. We're doing it in the evening time, so there's usually less volatility, and this is the best strategy for low volatility. You don't want to do this during the day when there's a lot of volatility. You want to do it at night. That's the thing that people don't really, a lot of traders don't understand. Okay. So I'm going to go ahead and set my take profit for this one as well, just to kind of play it safe. Once again, you don't have to use take profit orders. They are confusing if you're not used to using them. So yeah, guys, that's it. That's the iron condor or iron butterfly strategy. So I guess we do have a name for it if you want to look at it like that. And once again, it's not something that hasn't been done already. This is done in the options trading world. It's been done on Nadex plenty of times. Everybody, for the most part, knows about this strategy, but a lot of people, coming from regular binary options or European style binary options, might not fully understand how this strategy works. Okay, so it's just an in the money strategy that you're taking advantage of both sides, and basically it allows you to minimize your risk. Okay, so worst case scenario, let's say that the price breaks out of this range that we have. Okay, let's say it goes up, then that basically means that we lose our sell contract. Okay, because we said the price was going to be below that. If it breaks above that, then we worst case scenario, we lose that trade and we win the other trade. Vice versa, if the price goes down and we get knocked out of that lower position right there where we bought it, if that trade gets knocked out, then we lose that trade, but we win the other one, so we get some of that money back. We don't take the entire loss. You get what I'm saying? So, yeah, not that great, but still, if you could save some money on the trade, then you might as well